Welcome to yet another series in the webinar of from Mallapuram, that is Get More from Mallapuram, wherein the purpose of doing this webinar is only to create clarity such that you will have confidence in whatever the policies that you have already purchased or what are the policies that you are planning to purchase. So this is the purpose for which we are actually doing this webinar series, and we thank you all of you for coming down for today's webinar. And coming to today's topic, and even before getting into the topic, we just wanted to do the declarations of this webinar series, that is Get More from Mallapuram, and the purpose is only to create the clarity for confidence. Okay, are you with me? Right, thank you. And before getting into the topic, today's topic, let us actually do the declarations, right? And the first declaration is, we do not represent any insurance company. We don't represent any insurance company which is available in the Indian market, and we are not intending to promote any product or any company which is available in the market, right? So it is only that we want to create the clarity for having the confidence in whatever the policies that you're planning to purchase or already purchased. Okay, and the second declaration for this webinar, that is we will be only discussing the issues related to only insurance. So no politics, no movies, nothing. So we will be only discussing issues related to insurance, right? And we don't intend to criticize a particular person or a particular organization or a product of any particular organization. And if anything were to happen, it is only by chance, but we do not intend to do any criticize in this particular webinar series. Okay, and at the same time, the points which are discussed here are purely personal, and it can't be taken as an legal evidence under any court of law. With these declarations, let us now get on to the today's topic, and let's get into the topic. The topic of today is, what are the 10 tax planning traps? Yeah, you heard it right. Tax planning traps, okay, in your insurance planning. So in my insurance planning, what are the tax planning traps which are there? And many of the times we have actually seen people getting into the insurance, and the main drive for the people is actually getting through for their tax planning. And the moment they heard of tax planning, the insurance comes at the top of the mind. Okay, this is what we have actually seen in many of the situations. So let me just get on to the agenda of today's webinar series, that is 10 tax planning traps in my insurance planning. Right? Okay. The agenda is going to be like this. So we are going to have complete situation analysis in between. That's the first thing what we are going to do. We are going to do the situation analysis. Then we are going to have the main topic, that is the complete discussion, wherein we try to intend to give the clarity for confidence for whatever the policies that you have already purchased or planning to purchase. Right? Okay. And then we are going to review the entire points that we have discussed, the 10 traps. And then after that, we are going to look into the action points. Okay, so this is what we are going to do. And there is one more great thing which is going to come up, that is, you are going to see here, there is going to be a gift which is going to be given to all the participants on this webinar by the end of the webinar. Are you with me? Are you excited? Are you excited? Are you excited to look through the webinar and have a gift at the end? We are also equally excited to give you the gift, and we wish you all a happy new year 2021. What a great start that we are going to have, and an excellent, prosperous and happy new year for each of you from Mallapuram Insurance and Allied Services. Thank you. Right. So let's get on to the discussion. So the agenda is about the situation analysis. Let's look into the situation once. Okay. Right. We are going to have this gift. Right, now let's get on to the discussion. Right, so it is the situation analysis. 85% of the people who have taken the insurance, they started the insurance policy because of tax planning. So we thank the government initiative of providing the legal way of reducing the tax payable to the government, right? It is under the tax planning sections, right? And because of which people started getting into the insurance policy premium payments. Okay, so 85% they started their insurance because they wanted to do the tax planning. Okay, and out of the entire population, it is observed that it is only 1.5% of the total population is a tax payable population in India. And this is 2014-15 statistics, and 93% of the population are actually below the tax bracket, right? That is less than 2,50,000 rupees per annum is what their income earning potential. These are the statistics which has been given in the income tax department website. And government wants to give a legal way of how best people can start saving money and start saving their tax liability which they have to pay to the government. Okay, and not only this, if you look into any of these points, like why people look in for the tax planning at any point in time, the major thing what we have found is they want to feel tax is almost like taxing on their income. Nobody wants to give. Tell me how many of you would love to give away whatever the money that you have earned, and with a smile, right? It's not possible. See, we are the basic human people, wherein whatever the hard-earned money that we earn, we really don't want to lose it. And tax is something which we always feel how best that we can avoid in paying the taxes. This is a basic human nature. If this is not the way, probably you are not the most of the people who are available in the economy. Okay, and by looking into that, the main focus when we actually look into the tax planning main focus actually comes only in how best we can reduce the tax liability. That's the primary point where we always focus. And how can we get back all that money, whatever that we paid in taxes. Okay, so I've also even seen people who started who actually says that even if I don't make any return out of any of the tax saving investments, I still make money. You know what they say? Tax saved is actually money earned, and whatever the tax that they are actually saving by investing that particular money into any of these tax saving investments, they say that's the percentage of money what I earned out of the investment. So people always tend to look into the guaranteed kind of savings whenever we actually plan for the insurance and also even for the tax plan. So these were the most of the people who started looking for the tax planning through insurance. Okay, and if you look at the insurance occupies the maximum percentage of tax saving investments out of the entire portfolio. You have national savings certificates, you have PPF, you have so many instruments which are available in the market. And insurance is the major portion of the tax saving investments which is available in the market. Now, so that actually forced us to look into what are the major things that people tend to do some mistake in while they're actually doing the tax planning. And this is not that everyone is going to do that, but most of the people, what we have seen, because we help out the people in doing the tax planning, and that's where we have actually got all these details where they do wrong. Okay, and how best we can avoid these tax planning traps, wherein you will definitely make a tax saving. At the same time, you'll also have a proper insurance plan in place. So you need to have a via media. You need to have a situation wherein your tax is also being taken care, and also your insurance planning is also being taken care. So it should be a proper balance such that the solutions, whatever that you implement, will be of useful for you, for your family, and also for your future dreams and responsibilities. Are you with me? Yeah? Is this the right approach? Okay, just do one thing. Just type yes, this is the right approach, or you can just type it yes in the chat box so that I can see your response. Oh, you agree for this? Oh, I'm seeing a lot of people. I think almost 40. Oh my god, 50 people who are actually typing it yes. Yes, there should be a proper blend of a tax planning and an insurance planning in place. By the way, let me share you a secret. Okay, and the secret here is, if you actually do your insurance planning well, your tax planning is automatic. Yes, that's the secret. If you have your if you have your insurance planning properly done, your tax planning is automatic. It has been taken care. You want to know how it is? Just let's get into the webinar now. Okay, thank you. Right. So this is the situation analysis what we have done, and now begins the most important part, that is clarity for confidence. Clarity for confidence. This is a section. This is a section wherein we actually completely discuss about the things, right? And so that we always have a clarity of thought, so that we can have confidence in what are the policies that we have purchased, or what are the policies that we are planning to purchase. Are you with me? Are we ready? Can you see people typing in yes in the chat box? Oh yes, oh yes, oh yes. So let's start the discussion. Okay. So the first trap is, people always go for the short-term kind of insurance policies rather than a long-term policies. Okay, and this is actually a trap. This is actually a trap. Let me just explain you how. Okay, when you're actually going for the short-term policies where the premium per lakh of cover is always more when you compare with the long-term policies where the premium per lakh is going to get reduced. Okay, for an example, if you are looking for a endowment kind of policy wherein there's a long-term maturity which is actually going to be given. If you are looking for a 10-year product or a 15-year product, see the premium per lakh of, say, suppose a 50 lakh of policy or a 10 lakh of policy, right? Okay, the premium per lakh is actually going to be very, very high when compared to the same product if it is taken for a 20-year timeline or it is a 25-year timeline. Okay, it is not just the timeline what we need to look at. We need to also look at what are our lifetime achievements, what is our life planning, and accordingly we need to match the policy term along with that. But the best time to plan your policies, do you want to know? I just want to see yes in the chat box. Can I see yes in the chat box? Oh yes, oh yes, oh yes, yeah, excellent. I know when many people are actually participating in the entire webinar and typing the response in the chat, that actually gives a lot of happiness for us, because people are actually they are interacting with us, and chat is the best way of actually interacting with each of us during these webinars. We thank all the people who are actually responding on the chat box, right? Thank you. So do you want to know the best time to take any of your life insurance policies? It is now. It is now, because today's age is always less than tomorrow's age. The best time to take any of your life insurance policies is just now. Tomorrow your age changes, the health conditions might also change, or situations might turn up in a different way where the disability also can come up. Right? So if those things were to happen, then definitely you lose an opportunity to cover your risk and to cover your dreams and the plannings which you have for your family. Okay, so with that, let's get into the discussion once again. So the best time to take the life insurance policy is now, right? And the premium per lakh for a short-term product is always going to be more when you actually look at the premium per lakh for a long-term product. Okay, and the bonus declared is always lesser when the term is less, because you are giving very less time for the insurance company to actually invest and make some returns on your investments. Okay, so the lesser the term that you have, the lesser the bonus which is given by the insurance companies. So we always request to have a longer term of policies. Okay, and the insurable opportunity is going to be low cost if you are actually going to take it now. Otherwise it is going to be lost, because your age increases. The moment your age increases, the premium is going to be increased, and there's an increased premium what you have to pay for the entire life of the policy. For the entire term of the policy, you will be paying that increased rate of premium. Okay, so that's the reason we request everyone to take the policies for a longer term and take it now. When you are with a lesser age, your premiums are going to be less. Okay, are you with me? Fine. Let's go to the next trap. Okay, the second trap in the series of 10 tax planning traps in my insurance planning is this: only return oriented insurance policies are opted. Let me just tell you, insurance is a good investment, provided you're going for a long term investment where you wanted the guaranteed kind of returns from a particular investment. That is the situation wherein the insurance works the best. If you want to take out your money, say suppose 2 years down the line, 3 years down the line, 5 years down the line, insurance might not be the right option, because there will be a lot of expenses which are there. Even if you are going for a different kind, there are different kinds of policies out there, or traditional products. Then we also have a ULIP related products wherein the investments are linked to the market. Your money will be getting invested into the stock market. Okay, right? But you have the different kinds of policies, but it again depends on how much of risk that you are going to take. And what in my analysis, and also in our previous history of the experience what we have, almost 90% of the people, they always want the guaranteed rate of returns. Only 5 to 10% of the people, they always look for the risk oriented kind of investments. And we always suggest, if somebody wants to take the risk directly into the ULIP, into the stock market, instead of going through the insurance. Because if you want to pull out your money as early as possible, insurance is definitely not a place. Okay, insurance is definitely not a place wherein you want to withdraw your money within a short term period of say 5 years or even less than 5 years. This is not the place. Okay? Insurance is the best investment, is the best tool for you to safeguard your investment for any of the reasons wherein you wanted a guaranteed return on your investment, or a guaranteed amount of money which you want to plan for your dreams. And insurance works the best. And my personal opinion on this is, if you look for the rate of return or the timeline of at least minimum 15 years you have for any of your goal wherein you wanted to make your money, or you wanted your returns to be coming down to you after 15 years, then only insurance is the best. Okay, but it actually differs from situation to situation. So this is the generic statement what we are giving, but we can actually work out a specific requirement for you. And if you want to know what is specific to you, don't get worried. There is a number over here. It is 7569 645 645. This is the number on which you have to just give a missed call. Me and my team, we are always there to help you out. Just don't get worried. Just dial this number 7569 645 645. Are you with me? Okay, right. Let's get on to the discussion. So the second trap, what we were actually discussing is the return oriented insurance policies is what most of the people they'll be looking at. Okay, we suggest there should be a blend of both return oriented and also a pure term insurance policies. That means pure protection policies. See, let us go for those situations or those reasons for which the insurance companies are the best. Okay, insurance companies are the best in providing the protection. Let's go and get the best protection from them, because they are the only people who can give you the protection and the security for your dreams and for your family. Okay, returns you can also make it in different other sources, different other tools that are available in the insurance in the investment market. Okay, but protection is something which none of the other investments or none of the other tools can give other than insurance. So have your highest protection coming through an insurance company. And term plans are the best in doing it. And these days, it has become so very less cost, so affordable for every class of society, and we can have the coverages in place which is as low as how much? You can say 2 rupees per day for a 10 lakh rupee of coverage. It's possible. It's possible. Okay, and if you want to know some more details, we are always there. You can actually dial up the numbers which are flashed out here. It is 7569 Just dial up this number. We are always there in finding the best thing which is available in the market for you. Okay, and so the amount of cover should be always be taken care, because if the amount of cover is less, than if, say, suppose any unfortunate event happening. Now, who is going to take care of your family? Who is going to take care of the dreams that you dreamed about your family? Who is going to take care of the education for your children and a regular income for your family, right? All these things can be taken care if you have a proper and a minimum amount of coverage which is required, and that should be equated to your requirements. And this need to be worked out on a specific person basis. Okay, and for a simple thing, see, if you want an insurance coverage wherein if, say, anything, God forbid, anything were to happen, there should be a 25,000 rupees of regular income coming to you, right? Then at least you need to have at least 50 lakhs of coverage on your name. I'll tell you how. Okay, if you have a 50 lakhs of coverage in your on your name, and if, say, suppose something were to happen, an unforeseen event, right? Okay, so this 50 lakh rupees comes into the family, and all this money which gets into the family is tax free. There is no tax on this, right? This 50 lakhs, if somebody the family deposits into a bank account or into any of the guaranteed source of investment, right? And somewhere around 6% is the rate of return which we get. So 6% on 5 lakhs will give you 3 lakh rupees as a regular source of income for the family. And 3 lakh rupees of regular income coming to your family, that means it is 25,000 rupees per month. Now, if based on the lifestyle what we have, if, say, suppose another family need say 50 lakh rupees as the regular source of income, then it is how much? Yes, you are right. Can you just type it? How much it should be the coverage in the chat box? There should be a coverage of 1 crore for a 50,000 of regular income if it has to come to the family on a regular basis, on a guaranteed basis. Are you with me? You're getting it? Now, over and above that, if, say, suppose the family has got some loans, so the loan need to be repaid. So you need to have even that loan amount as an additional coverage coming to you, right? And what are the other personal expenses, the personal goals which are there? Suppose the schooling expenses, or you want to plan for the children's higher education, wherein you want to, if, say, suppose somebody is going for an higher education at today's cost, probably a minimum of 50 lakh to 1 crore is what is expected as a total cost. Of course, if they get an aid or kind of thing, they will take care. But if they don't get an aid also, as parents, do you think we have to support our children? Okay, if that is now as a cost, then probably our children is around 5 years or 6-7 years, right? So probably another 15 years down the line, you need to have the same amount of money. Probably now it is 1 crore of rupees. 15 years down the line, with an inflation, it might become even 2 crores. Now you're saying how the things are getting piled up, right? So it is not just the tax planning. It is not just reducing your taxes. It is not just saving that 1.5 lakh rupee which is given under the tax benefit under section 80C, which only you will be investing into the insurance, right? You need to have an investment plan and also your coverage in place. If you have the coverage in place, only then you will have a proper insurance plan, right? And let me just repeat the secret which I have told you in the starting of this webinar. If you plan your insurance, if your insurance planning is done properly, your tax planning is automatic. It's been taken care of. Are you with me? Right? This is a good secret. Now, so let us not focus more onto the tax planning rather than focus on the purpose for which you are going out and working for your family. There should be always a purpose. This purpose should be resolved. If the purpose is not resolved, then the reason, whatever might be the thing, like probably because of the tax planning you have invested into the insurance, or because of any other forcible reason which because of which you have done it. But if the purpose is not met, then it is gone. The real purpose of making all your insurance policies for your family is gone in waste. Okay. So if you are looking, coming to the point over here, so if you are looking only for the return oriented policies, I suggest just balance between the protection and the return oriented policies, both together. The returns less than 15 years, we don't suggest, but anything more than 15 years and you want always all guarantees, then insurance is the only place. Insurance is the only one which can give you the guarantees. Okay, right? And longer the term, the better the bonus accumulation within the policy. So I've seen many of the insurance companies, they give a better bonus for the policy term of 20 years and above. Okay, they actually give a better bonus. The better bonus gives you the more accumulation within your policy, and that gives you a lot of fun which you can actually use it for the specific purpose for which you started the policy. Okay. And let's get on to the trap number 3, right? The discontinued the old policies. Now I've seen people, they just started the policy very long back when they just entered into their earning age, their first job. They actually got their this insurance which they have taken care, because some of their friends in the family or their HR manager has said, like, no, there is a tax which you need to pay or you have to take some insurance. Okay, and because of which they don't know what to do, so they've seen their friends doing some insurance policies, so they just went there and then they're taking the policy. That's how they started off. And then after that, we have seen in many of the situations wherein the people started their first policy for the tax planning, for the insurance policy, and then after that later on they got married, and now they are actually looking at building up their own house. They have taken the housing loan, and once they have taken the housing loan, they have seen that the principal part is actually taking care of most of the requirement of their tax planning. So because that 1.5 lakh rupee which is given by the government under section 80C as a tax deduction, okay, and because that 1.5 lakh rupee is covered, so they just stopped paying the insurance policies. We have seen many such cases. Okay, just don't do that. Your existing policy is always better than whatever the policy that you're going to purchase. The reason, because when you have taken the policy, your age was less. The premium per lakh what you were paying is less, and what you will be paying in your old policy is always lesser when you compare with your new policy. So we suggest, do not discontinue any of your existing life insurance policies. Right? Okay. And we never suggest to do that. Okay, so coming to the discussion point over here. So if you actually discontinue the policy because there is a housing loan what you have actually taken. Okay, so but if you have taken a housing loan, it is even more important now, because that liability has come in. Probably that 30 lakhs or 50 lakhs or 1 crore of housing loan, whatever that you have taken, has actually increased your liability. Now that liability need to be covered. So don't stop your existing policy. Don't just stop your existing policy. Rather, you increase your coverage. This is, I thank all the banks, because they are also insisting on having a coverage in place. And I've seen many of the banks, they say, you need to have an life insurance coverage for yourself, and also an asset policy, an asset oriented policy for your house. That's good. At least because of that reason, people are actually opting for the pure term insurance policies under the life insurance companies. And we actually thank all the banks who are actually insisting on taking a life insurance coverage along with the asset coverage under the housing loan for all the housing loan holders. Okay, we thank all the banks. Okay, and this is something which they have to do. They have to increase their coverage rather than stopping the policy, and lose. If you actually cancel your policy, if you actually discontinue your policy, you will be actually losing a lot of premium on that. Okay, your premiums have whatever you paid will never be coming back to you if you discontinue your policy. So that's the reason we don't want anybody to discontinue your policies. Okay, and you cannot get the bonus further. Say suppose you have taken the policy and you paid the premiums for the first 5 years. So the first 5 years you got your the bonus which got accumulated into the policy, but after that you are not paying. If you are not paying, there are two options which actually happens. If there is an automatic loan payment, then the policy will generate a loan and pay the premiums and still continue giving you the coverage. Okay, but if the loan paying capacity has actually gone down, then the policy will lapse. Okay, and the second option is the policy can also become a reduced sum assured. Reduced sum assured means this is a concept wherein say suppose you have taken a 1 crore of policy, and the premium payment term is say suppose for 20 years. Okay, and say for an example you are paying a premium of say around 25,000 rupees per annum. Okay, now you paid it for only 10 years, and now because of some or other reason you are not in a position to pay further that 25,000 rupees. Okay, so now what happened? Out of the 20 years term, you paid for only 10 years. Because you paid for only 10 years, the sum assured of 1 crore will be reduced down. The insurance company will not ask you to pay the premiums, but they will reduce the 1 crore to 50 lakhs and they'll continue giving you the coverage. This is called as a reduced sum assured, okay, or reduced paid up policy. Okay, what it does, it actually reduces your sum assured, the initial sum assured, whatever you're taken, on a prorate basis on number of years that you are paid. Okay, and this helps you at least to have the coverage in place. So instead of completely surrendering the policy, we request at least you make it as a reduced paid up, so that your policy will be in force and you will get the real value for whatever the premium that you are paid. Otherwise, if you look at the entire premium, if you cancel the policy, even you will not even get the premiums what you are paid. Okay, so that's the reason we never recommend anyone to cancel their existing policies. Existing policies are always the best than what are the new policies that you purchase, right? Okay, and it actually even reduces your coverage, because now even if you want to start a new policy probably next year or down the line, 2 years down the line, you will not be in a position to get the same rate. Okay, so it actually reduces your coverage per the unit amount of premium what you'll be paying. Okay, and coming to the trap number 4. Trap number 4 is asking for commissions, and this is something which we never ever ask. Which we never ever ask the clients to actually support it. No. See, if you ask for commissions, you know what is going to happen. Just think from the person who is actually recommending you the products. Okay, if you're going to ask the commissions what the person is going to earn out of the insurance policies, what he's suggesting, he's definitely going to suggest you something wherein he'll make more commissions rather than giving you the product which will be of more beneficial for you. I suggest never ask any commissions to any of the insurance professions who are actually supporting you and suggesting you the right product. Because if you force them to do it, I know there are a lot of regulations out there, and IRDA says, and it prints very clearly on all the proposal forms and all the marketing material, that giving back commissions is something which is not agreeable and it is not legal. Moreover, even if you insist, which is not recorded anywhere, then definitely the person who is going to recommend you the products, he will recommend you something wherein he'll make more money, such that he'll give you less amount of that particular commission, and that will never be useful for you. You can just blindly think about it. You can just blindly take my word on that, right? always look for the policies which is of useful for you. Don't focus on the commissions. If you focus, then definitely the people will suggest you something which is of not useful for you. They will suggest you something which is useful for them. Okay, do you want to get benefited out of their small commissions, or you want to get benefited out of the larger coverages that you can get under the insurance policies? Think about it. Think about it. Right? Okay. I want put up a question over here to all the audience over here. Right? Just type it in the chat box. Do you want the best policy, or do you want a small little commission from the agent? Is it policy or is it commission? Just type it in the chat box. Wow. I think it's almost 100% of the people. I think whoever is typing in, excellent. Thanks a lot. Okay. So it is the best policy what we want. Don't ask for commissions. It looks so stupid on our part when we actually ask the professional person who is earning his bread and butter out of the insurance process, what he's paying or what he's actually suggesting the people. Okay, asking for his own money. It's like now you are going to the doctor and asking the doctor to pay your fees. It's not correct. And moreover, let me also tell you one more thing. You are getting the entire premium receipt. What are the total premium that you're paying to the insurance company? Right? So it is not you who is going to go. It is not who is actually paying the commissions to the person who is suggesting you the policies. It is the insurance company which is paying the commissions for actually sourcing, for underwriting the right risk and suggesting the right policy for your requirements. So focus on your requirements rather than the commissions, asking the commissions for the insurance professional. Okay, this is suggestion. And thanks a lot for all the people who have actually typed in as the best policy in the chat box. Thank you. Let's get on to the discussion. Okay, so they will definitely suggest you something where you will get low returns and something which is not suitable for you. That's low beneficial product. So cannot expect a professional advice if you are not behaving professional with the insurance person. Expect a professional advice and be professional in your approach to the insurance person. It should be a win-win situation for both of us. Right? Thank you for on that point. And let's get on to the discussion over here. Right? So what is the next trap in the insurance in the tax planning? Okay, the trap number 5. People just say, okay, don't say. We have seen many such cases wherein when we go out and try to educate people, so tax planning is okay, but you should also look into your planning, your life planning. Okay, and the goals that you want to plan for your family, the goals and the planning for your children and everything. This is state something. No, say forget about all these things. Just come straight to the point. See, I have this 1.5 lakh which I need to invest, and you tell me what is the product which is available, and I just wanted to invest in a policy wherein the shorter the term, the better I have. Okay, so the and this is what we get. Please don't focus more onto tax planning. Any which way you want to pay that money. Pay that money which is in line with your requirements. Got it? Tax planning should become a default thing. Don't make that as the most important part and most important thing to be focused on. Tax planning happens by chance. It just goes on. But you have to do your insurance planning, your financial planning in place, and then tax planning is something which just happens. Are you with me? So focus on your purpose in life, your dreams in your life, and then comes your financial planning, and then comes your insurance planning. Then tax planning is something which is by default. Are you with me? Just type yes, we are with you in the chat box. Yeah, with you. Yes. Oh. Thank you, Lord. I thank all the people who are typing in that in the chat box. It's so nice to have you good people on this webinar. Now, this is how we get a lot of energy in actually doing our services, and we want to give more. That's how this series, the entire webinar series has started. Get more from Mallapuram. It's not just advice. You need to have a proper clarity of whatever the policies that you're purchasing, such that you will have confidence on all those policies which have been designed by so many good people out there in the insurance companies, so that it will fit, it should be befitting to your requirement. Yes, are you with me? Thank you. Let's get on to the discussion. Okay, so the fifth thing is the fifth trap, which people who most of the times they actually focus is just tax planning. Don't be so overwhelmed with that. Okay, yes, tax planning does happen. Okay, right, and will if you are in hurry, then it is like now you might even do a wrong step and choose something which is of no use for you, which doesn't even fit into your financial planning, which doesn't fit into your dream planning, nothing. Why do you want to waste your money? Instead, have a proper planning, have a purpose, and then have a planning for that, and have insurance as a backup, wherein if anything were to go wrong, even then your family is going to go and achieve those dreams. What? That actually gives you a lot of peace of mind. Okay, a lot of confidence and clarity in your approach. Don't just focus only on the insurance, or only on the tax plan. Okay, tax goes, it just comes by default, right? Okay, otherwise you will be just wasting your money, and money is something which should never be wasted. And if you don't even invest it properly, that itself is a wastage of money. Okay, and do insurance planning. Do insurance planning properly, such that the tax planning is automatic. It's just automatic. Right? Are you with me? Let's get on. Okay. So let's come to the trap number 6. Are you all okay? Can we still go ahead? Okay. Just say yes. Right. Okay. See, I've seen most of the people. Why did you take this policy? We generally ask this, like, because most of the people, they do also come to us to review their policies, and when we actually sit out for a review session with their existing policies in place, we just ask, why did you took this policy, this one, and what is the second one? So why did you actually take in this policy 5 years back? 99% of the people, the answer what we get is, my friend was actually taking that policy, so that's the reason I have also taken the same policy. Now, the secret question here is your friend requirement is exactly as it is of your requirement? If it is not, even though you have taken the policy, that might not be the right fit for your requirement. Have your requirements, your goals, your financial planning in place. Once you have all these things in place, then you can actually look for the best befitting solution, whether it could be insurance, it could be other investments, or any other source of investments wherein you can actually invest and get the rate of return. And you need to have your timelines in place for choosing the right insurance product. If you want to know, if you want to have those customized thing done for yourself, don't get worried. Just dial in 7569 645 645. This is the number which is out there, right? You are able to see it here, right? It's 7569 645 645. This is the number. Just give a missed call. We are always there to help you out. And the purpose of actually doing this complete webinar series is only to provide that kind of clarity on whatever the products that you have already purchased or planning to purchase. We are always there. Me and my team, we are always there to help you out. Okay, right. So let's get on to the discussion over here. So we have this the trap. So my friend has taken it. So I also taken that particular policy. Okay. Now, is that the right thing? Your requirements are not the same as your friend's requirement. So how can it be? It be same? Okay. Then your purpose is to be addressed, not it's not just the money what you are actually putting into the premium, but it should really serve the purpose for which you are actually taking the policy. The purpose is not there, then you are just wasting your money. Okay, and we don't want you to waste your money. Okay, and then do the financial planning first, as we said earlier. Do the financial planning first, then the tax planning is automatic. Once the financial planning is done properly, right, the dreams, the goals of your family, then comes your investment planning, right? So what are the other instruments which are available in the market along with the insurance, right? And what is the short-term investment options? What are the long-term investment options? And what is your behavior? What is your character? How do you want your money to work for you? Do you want all the guarantees in place, or you can also take some risk? So based on that, we should be able to choose the different options which are available in the market. And if all these things go wrong, if still you are there, you have all the skill sets, so you can handle the requirements, you can take care of your situation and go and hit on your targets, your goals, your dreams. But if something were to happen, some unfortunate thing were to happen, right? Do you want your family still go and achieve the dreams and whatever that you plan for your family? If yes, then you need to have the insurance in place. So it is not just the insurance. Have your financial planning in place. Then comes your insurance planning, and tax planning is something which is by default. Don't just focus on that. Don't just focus on your tax planning. Are you with me? Just type yes in the chat box. Just type yes in the chat box. I'm saying a lot of people. Thanks a lot. Thanks a lot. It actually gives me a lot of boosting, like now when we actually do this webinar series. Okay. And let me just repeat it for the benefit of all the viewers, because this is something which is most important. We suggest that have your dreams first, have your purpose of life as yourself and also as a family. What is the purpose for which you're actually thriving, you're thriving to go and achieve? What is that which makes you so happy when you go out and achieve? Have those dreams in place, have those planning in place, right? So this is what the first step which you have to do. Then comes the second step. The second step is, if you have to go and achieve all these things, how do you want to go and achieve? Do you want all the guarantees in place, or on your investments, and what are the new skills that you need to acquire, and what are the new things that you need to do to go and achieve your targets, right? It's not just the financial target. It could be also something like, now I need to even have a right fit for my body. I need to increase my fitness level, right? So what are the things that you need to do? So where is the discipline in place? What are the things that we are going to do it on a regular and persistent basis? So we need to do that second level analysis, right? And then the third level analysis comes. Okay, then what are the options which are available for me, and what are the options which suits near to my way of behavior? If I love to have only the guarantees in place, I love to choose only those options which are in place, right? And then after that, if something were to happen, then what is my fallback option, right? Will my family be in a situation to take care of those unforeseen circumstances? If they can't, then how are you going to secure the dreams, secure your responsibilities for your family? That's where only insurance comes. It's just the insurance. There is no other option. Okay. Once you do all these things, tax planning is something which is automatic. You no need to even think about it. It's already there. Okay, so that's how we need to look into the tax planning when you compare with the insurance plan. Okay, then the next trap, the trap number 7. Insurance policies. This is what most of the if there are any insurance fraternity people out there in the audience, they will definitely agree. They will definitely agree. Jan, February, March is the insurance season, because you know how this happened. You know how this happened, because the HR people start deducting the salary from January, February, and March for the tax planning, because the taxes need to be deducted. That's when your salary got deducted. That's when you will say, no, 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 now I need to go and purchase the policies. That's where we see a lot of people taking their new insurance policies during January, February, and March. And that's the reason it is called as a season for insurance. In the market of insurance, we always call the season begins at the 1st of January, and it goes till 31st of March. And you see a lot of pressure in almost all the insurance companies, because there are a lot of people coming in, and they will search who is the best person who can actually give you the policies, and they will see, like, who is the person who is very near, right? And probably a friend, a relative, a neighbor, like, and that's where, like, they start purchasing the policies. Okay, so this is the season wherein we'll see a lot of rush, people asking for the insurance policies. Okay, but if you look into the real trap over here, because there is an emergency and there is an urgency, and people do ask, like, now when I'm going to get my the premium receipt, because I need to submit it in my office. This is the biggest request which we get it from the all the clients. You know what they say? They don't even ask the policy document. They say, when I'm going to get that receipt, because I need to submit it with my HR. Otherwise, my salary is going to be deducted again. This is a major thing which pushes people to go and purchase the insurance policies during January, February, and March. Okay, and we suggest, just don't do that. Just don't do that. Okay, you can still purchase the policy, but do it with clarity. Do it with clarity. The reason because if you do it in a hurry, you tend to purchase something which is of no use for you, which is not in line with your requirements. Have a suggestion, have a proper suggestion on that. If you need any help, we are always there. Just you need to just dial up this number, that is 7569 This is the number on which me and my team, we are all available. So just dial up this number, just give a missed call. We are always there to help you out. Okay, understand your requirements first. Once you understand the purpose and the requirements, then you will be in a position to choose the right option which is available in the market, and which will help you not just in your tax planning. It will help you in achieving your dreams and your goals which you just dreamed about for your family and for yourself. Okay, now let's get on to the discussion over here. So not just the Jan, Feb, March. Okay, the real tax planning starts from the financial year starting. Okay, so it starts from April. It starts from April and it goes till March. Okay, and you know what happens because of this? You can also plan your budgets, because suddenly you want to pay some lump sum money, and probably you may have to take loan from your friend or from your brother, from sister, from your parents, and then pay the money. So all these hassles can be avoided. You can actually have your tax planning started from April, and it may go till March. So you can have this little chunks of money which is getting on probably on a monthly basis, or on a quarterly basis, or on a half yearly basis, so that there will be a less reduced load on your budgets, and gives you a lot of peace of mind to choose the right product, for yourself and for your family. Okay, and so do the insurance planning. Tax planning is something which is automatic. It's almost like it is taken care. Okay, and coming to the trap number 8. Trap number 8: policy term matching with the retirement age. I've seen many of these situations wherein people have actually purchased the policies by looking at their retirement age. But probably till the retirement age, you're in an active mode. You're just working out. You're just going to your office, coming back. So this is an active life. If you have an active life, probably you are taking care of your body well, right? But if your policies are coming to an end and the coverage is stopping on your retirement, then how are you going to have the coverage after the retirement? We are seeing these days, we are seeing people wherein probably it's the age which is defining their retirement, but it is not the real retirement. They still have some responsibilities on their head. They still need to perform, they need to deliver few more, they need to be responsible for few more deliverables which they have to do for their family, right? And we have seen people who are still working even after their retirement age. You know, do you know the real retirement? The real retirement is when your money starts working for you. When your money starts working for you, that's when you can stop working for yourself. Then you will have the real regular income coming to you and your family. It is not the age. It can happen in 5 years, it can happen in 10 years, it can happen in 20 years down the line, but you need to plan for it. Once you plan, only then you will be able to have that clarity for confidence. You want a professional approach for that? All that what you need to do is just dial up this number 7569 645 645. Me and my team, we are always there to help you out in planning your financial goals, your dreams, and your regular income. Okay, so let's get on to the discussion over here. So it's a logical way of deciding on the premium, the policy term matching with your retirement age, but we suggest you have your premium payment term match with your retirement age, but not the policy term. Okay, let me repeat once again. Have your premium payment term of your insurance policies match with your retirement age, but not the policy term. The policy term should be for your whole life. See, whether we live for 60 years or 70 years or 80 years, it is all probability. But most of the guarantees is that we might not be living our 100 years. Okay, so have your coverage for 100 years such that all that sum assured, all that coverage what you can have it from your insurance policy, you can directly write it in your will, and you will your dependents will definitely get that as a part of your asset. Are you with me? You need any help on these solutions, don't get worried. Just dial 7569 645 645. This is the number which is flashed over here. Just give a missed call. Me and my team, we are always there to help you out. Okay. Now, so insurance coverage stopping at retirement age, don't do that. Have your premium payment term stopped, but not your retirement age, your policy term. Policy term should be as long as possible. Make it 100 years, make it 99 years, at least 80 years. Okay, you need to have this kind of coverages in place. Okay, and until then you need to work. If your money doesn't work for you, if your money is not enough to work for you such that can earn your regular income for you and your family, until then you still have to work. There are still the responsibilities to be taken care. If you still have the responsibilities to be taken care, but you doesn't have an insurance policy in place, then if say God forbid something were to happen to you after the retirement and still the responsibilities are there on your head, who are going to take care? Just think about it. Right? You are retired, but you still have some responsibilities on yourself which you have to deliver to your family. And God forbid something were to happen and your insurance policies are all completed on your retirement age. Who is going to cover? Who is going to give that protection for your dreams, for your responsibilities still you have to deliver for your family? So we suggest you may match your premium payment with your retirement age, but have a coverage beyond the retirement age for your whole life. That's the way how we need to plan. Need any help? Need any help? Just dial up this number 7569 645 645. Me and my team, we are always there to help you out. Okay, right? So it's not just your retirement age, which until which you need to plan your policy copy, your policy term. You need to plan your premium payment term and the policy term together. So do the insurance plan properly. Do the insurance plan properly such that your life responsibilities are not taxed. So your focus should just not be on the tax, but it is your purpose in your life that makes the difference. So that makes the real purpose. And insurance planning is only a supporting factor for that. Okay, right? So coming to the trap number 9. Okay, so pension plan. This is something which we have seen, like, probably most of the people, like, we have seen, like, they have the pension plans in place, where in the pension plans they pay just 10,000 rupees on an annual basis. Just 10,000 rupees on an annual basis. And you know something? 10,000 rupees, you pay it on a regular annual basis. How much of money it is going to get accumulated, and how much of pension you can get it on a monthly basis after your retirement? It's peanuts. It's just peanuts. Okay, unless you have your financial planning in place, wherein you decide on how much of pension that you need to get it on a regular basis, and unless you have that figure in place, you can't decide on what is the lump sum money that you need to accumulate till that retirement point. Once you actually come down to that lump sum money which need to be created, then you need to back calculate on how much of money that you need to invest from now. And that investment is not just insurance, it might be even the other investments options that we need to evaluate, which should meet your behavior, which need to meet your way of thinking. Okay, only then your complete planning becomes perfect. You will have clarity on whatever that you're doing, such that you will have confidence on whatever the approach that you're adopting to yourself and for your family. Need any help? Need any help? Just dial up this number 7569 645 645. This is the number. Me and my team, we are always there to help you out. We are always with you. We do not represent any insurance company, nor we are promoting any product. We are only focusing on how best we can give more to all the people. That's how this webinar series of Get More from Mallapuram has started. And thanks, we thank all the people who are there on this webinar, who is supporting us consistently and who is helping us to improve ourselves. Thanks a lot. And let's get on to the clarity for confidence discussion. That is, so if you just do only that 10,000 rupees under your pension plan, which takes care of a portion of your section 80C of the income tax, right? It is not going to serve any of your purpose. Okay, so plan your pension first. Look at your future requirement, and accordingly you have to increase your investment towards your pension. Okay, that's how you need to do. Okay, so there is also a regulator who has come in, that is Pension Regulatory and Development Authority of India. They are doing extremely good job. They are extremely doing a very good job, wherein they are actually helping out people to understand that it is a pension. If it is not there, how it is going to be a difficult situation when you're not in a position to work further. When you're not earning, your money should start earning for you. If that is not happening, then there is no pension, and then there is no proper retirement. There is always that deficiency of money which comes into the picture. So it's not the 10,000 what you are saving in your pension plans. Probably you need to plan a little more on that. And how much? Don't get worried. We're always there. Just dial up this number. It is 7569 645 645. This is the number on which you need to dial up. Okay. And coming to the 10th trap of your tax planning. Okay, health insurance. Health insurance I don't need. I don't need because my company actually takes care of my and my family. Kudos, you're so happy. It's so nice. It's so nice that your company is still taking care of you and your family. But let me just ask you one question, gentlemen, who are actually saying that my company takes care of my health insurance and also my family health insurance. Let me just ask you this question. My family, whose responsibility? Answer this one question. My family, whose responsibility? Ask this question to yourself. Is it my company's responsibility? Is it my company's responsibility? Or is it my responsibility? My family is my responsibility. And how can you make your company responsible for that? And you know something? The biggest trap over here, you feel that your company is actually taking care, right? Okay. But how long do you stay with that company? And how long your company can still sustain in giving that particular policy to all your employees? They still want to do it, but because of these group insurance policies, because the conditions of coverages and the additional coverages which are given are more, because of that the claims started raising so much that the premiums year on year renewals are actually increasing. The premium which the company has to pay is increasing. And many of the HR people with whom we interact, they also even say that the increase in your health insurance premium from the company side, the percentage of increase which is happening on a year-on-year basis is more when compared to the hike what they give to the employees. So how long can your company sustain? If your company can't sustain, at some point in time, now we are actually even seeing most of the insurance, the corporate companies, they are actually sharing this particular premium. They are paying a part, they are loading that part of the premium to the employees. But if it goes continuous like that, will the corporates be able to sustain? If the corporates can't able to sustain, and if you have to go and take a new policy, do you think you are going to have all the coverages right from day one? No. Insurance companies are not going to give you all the coverages in your health insurance policy right from day one. The more the experience that you gain, the more the experience that you have with the insurance company, your individual policy will also become as good as your group policy. Right? So have even a personal policy with you. See, even if you look at, like, now, what is the maximum coverage that you can have from your corporate policy? 3 lakhs, 5 lakhs. We have seen the situation in the recent past, in a pandemic situation. 3 lakhs, 5 lakhs is nothing. It just can't help you to get the best medical facility for your family. And in a pandemic situation wherein it's not just the one person, it is the entire family getting affected because of the situation, then do you think that same 3 lakhs and 5 lakhs is going to help you out? No. At least have a kind of a top-up plan over and above your corporate plan. At least those policies should be in place. What we suggest? We suggest everyone to have their personal health insurance policy which covers themselves, their family, especially their parents also in place. It is a must. See, my family, my parents are my responsibility. We can't make our corporate companies to be responsible for that. They might support you by extending you those policies, but they can't sustain going further. And you should not entrap yourself with one single company because they are giving you those policies. You should be having those policies as an add-on benefit, but you can't depend completely on that. So this is our suggestion. Okay, you need any help in choosing the right product which is available in the market, which is exactly suitable for your requirement. Don't get worried. Just dial up this number 7569 645 645. This is the number on which you need to dial up. Me and my team, we are always there to help you out. We do not represent any insurance company. We only represent your requirements. Just dial up this number. We are there to help you out and we are always with you. Okay, with that, let's get into the discussion of into our webinar. Uh, well, my family, it's my responsibility. We need to take care. Okay, if we have to take care, and this also, the beauty is government gives you even a tax benefit for taking health insurance policies. It keeps on changes. I think if you take it for yourself and your family, it is 25,000 rupees is what you get the benefit. And if you're taking it for your parents, additional 25,000 which you can claim. And if your parents are senior citizens, then 50,000 rupees is, I think that's the recent addition which has happened for the section 80D. And if yourself and your parents both are senior citizens, then up to 1 lakh rupees what you can claim. So this is what I got. And to get more details on your sections in income tax, just go and reach out to your tax consultant, your child accountants. Okay, because we are not child accountants, so we can't have an authenticity to say that. But these are the sections which are there. You can actually Google it, and then you can even go and meet your tax consultant for that. Okay, and so these are the traps, and let's review all the tax planning traps which you have done till now. Okay, and so the review is, we said don't just focus only on the short-term policies. Okay, so look at the options wherein you can also look for a long-term products which goes beyond your retirement age. Okay, and then it's not just the return oriented policies, have the policies wherein you also have the coverages in place. Okay, and then discontinuing of the old policies, never ever do that. Never ever discontinue your old policies. Your old policies are the best policies. Okay, and asking for commission, never ever approach. If you ask for the commission and the person is actually giving it to you, right, just take it guaranteed from our side. He is giving you something wherein he is getting the maximum benefit and you are not getting the best benefit out of your investment. Never ask for that. Ask for the professional advice. Ask for more details. Okay, insurance is the subject matter of solicitation. That's even we put up on the webinar over here, right? Ask more, get the best out of them, and choose the right product, right? Okay, and then focusing only on tax planning, don't do that. Tax planning should be by automatic. It should just happen by itself. Don't just focus on that. Okay, and then my friend took it, so I took it. Don't do that. Your requirements are different, your friend requirements are different, so how can you make it same? So both of you are different. Okay, and then insurance during only Jan, Feb, March, don't do that. Start planning right from April so that your budgetary constraints can be taken care. Okay, right? So coming to now, we reached the end of the session. So how many of you are ready? How many of you want the gift? Your gift is ready. Are you ready to pick it up? Yes? Let's look into this. Okay, so there are two parts for your gift. So this is a checklist with which you can choose the best insurance available in the market. First, we'll deal with the life insurance. Look for the lowest premium which is available for the term what you have chosen for your age. Look for the lowest premium, and look always for the longest term. This is the second checkpoint for you. Okay, the third checkpoint, look for the largest cover. So the first gift from our side is how best you can choose the best life insurance product which is available in the market. Look for the lowest price available in the market for your age, right? And second thing, look for the longest term which is available in the market with those products which you are evaluating. Third one is, look for the largest coverage. Your complete dreams, your responsibility should be covered. Okay, this is the first gift. And focus on your dreams and your responsibilities, not on the tax planning. This is an urge from our side. Focus on your dreams and your responsibilities, not just on your tax planning. That's a trap. right? So this is the first gift. So the checklist on how you can evaluate the best life insurance product which is available in the market. Okay, now the second, this is a checklist for your health insurance. Okay, look for no room rent restriction under your policy. Okay, your health insurance product, if you have to evaluate it, you need to evaluate on these four major parameters. The first thing is there should not be any room rent restriction. Choose that product. Okay, second, there should be a very less waiting period available in the product when compared to the peer products. This is the second thing. The third thing, they need to have the largest network of hospitals, especially that network of hospital. Those network hospitals should be very near to your home, so that in case of emergency you can rush to the nearest hospital which is available, and check all these details well before the emergency turns up, right? And then the largest cover, because the highest sum assured that you go ahead, the premium per lakh of your health insurance policy will come down. Okay, so go always for the highest sum assured, right? And then the focus point for your health insurance is this. Okay, look into the conditions of coverage. If the conditions of coverages are not apt for your condition, don't choose that product. Okay, and you have any doubts in this, you have any doubts in choosing the right insurance product for your requirement, whether it is life insurance, whether it is pension, or whether it is your health insurance product, don't get worried. Just dial up this number 7569645645. This is the number on which you need to dial up. Me and my friends, my team, we are always there to help you out in choosing the right product so that it will meet all your requirements and you can have confidence, so that you have clarity in what are the products that you are going to purchase or which you have already purchased. Let's have a review on that. We are always there. Dial up this number, right? 7569645645, right? Okay, right. And so these are the two gifts. The two gifts are the checklist for choosing the right life insurance product and the checklist for choosing the right health insurance product for you and your family. So this is the gift from our side, and we do not represent any one insurance company. We only represent your requirements. Your requirements, you need to have a customized solution. We are always there. Just a call away. Call up 7569645645, right? And protect your dreams, your responsibilities, so that you can have a happy family and have a peace of mind with yourself. Okay, right? With that, let's get on to the action points which need to be followed, and which we recommend everyone to do it. Okay, and we always say this in every webinar. Every webinar we do this. Okay, check your existing policies. Never ever stop paying the premiums. Pay premiums well before. Check your existing policies, when is their due date, and then start paying the premiums, right? Okay, review all your existing policies with your advisor. We don't know, when we have taken the policy, the dreams were different, the purpose was different, the situation was different, so we thought at that point in time that is the best solution. Probably that solution might not be meeting your existing changed conditions. So as the conditions do change, we may have to review the existing policies and see how best it is actually meeting our requirements now, and if there is any changes need to be done or any new policy to be taken care to handle the situation, we may have to even look into that. Okay, so always review your existing policies with your advisor, and you need any help in that, my team is always there. Just dial up this number 7569645645. Okay, and then discuss with your family members. This is one single point which we always try to emphasize on our every webinar. Okay, we want to cultivate this culture of discussing insurance on dining table. We should be able to discuss all our policies with our family members. We have seen 95% of the people, they have taken the policies, but they never made any effort to discuss with the family members. See, in case of emergency, it is your family members need to take care of the situation, right? Okay, so So always discuss your policies with your family members and try to answer their questions. Okay, they might look sometimes really stupid, but that's good because the clarity comes out of those stupid questions. And we always love you can't answer those stupid questions, don't get worried, we are always there to help you out. Just dial up this number 7569645645. We can just help you out in answering all the questions, and so that you and your family will have clarity on your policies which you have purchased, so that you can have confidence on whatever the company from whom you have purchased. And if there is anything to be reviewed, anything need to be changed, we're always there to help you out. Okay, and we can only guarantee one thing: we do not represent any insurance company. We represented your requirements. We represent your requirements, your purpose. Okay, so have a discussion with your family members on the dining table, and make all these details available to your family members. In case of emergency, they have to take care. Okay, so have all of them available to them, and have the emergency numbers written on those documents, so that they should know whom to contact in case of any emergency. Right, with that we have actually come to the end of this webinar series, and we thank you. So it's my insurance, it is whose responsibility. It is always my insurance, is always my responsibility. And with that note we come to an end, and we thank everyone who has actually come to this webinar. And we look forward for the next webinar, and we will see you all in our next webinar. Thank you. Thanks a lot for joining us.